Okay. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Elf Cosmetics stock. And that is because, as you can see here, the stock is down another 4.5% today. So I picked up some more shares, and I think this could possibly be the bottom for the stock. But if it isn't, I mean, just a year ago, the stock was $50. So it is possible it goes back to around that price. And if it does, then I'll buy more shares. But I'm still happy paying this valuation for it because, as you're about to see, the numbers are pretty good here, and you're getting it at a $3.5 billion market cap. So if you don't know, Elf is a cosmetics company, and they are famous for making quality products at a very cheap price. So we have analyst estimates of EPS, $1.35 EPS this year, which is a decrease from last year, which is not good. But it's expected to double next year, go back to $2.86. Then we have revenue growth of 22% this year and then 17% next year. So, if we get into some of the things this company has been doing, over the last 5 years, Elf has gained 800 basis points of market share. It currently holds the number one unit share position in the U.S. mass cosmetics category. They have recently raised their outlook to 22% year-over-year revenue growth, which is sales of about 1.6 billion. Their fastest growing lever right now is international, with a 55% CAGR in international markets over the last 5 years. International markets now represent about 20% of their total sales, up from just 14% a year ago. The other thing Elf has going for them is how fast they could take a product to market. Elf can take a product from concept to shelf in as little as 13 to 20 weeks, while other legacy competitors take anywhere from a year to a year and a half. So that's the other thing they have going for them. They offer prestige quality, 100% vegan, cruelty-free formulas at a fraction of the cost. Their average unit price is $6.50 compared to $9.50 for other mass brands. Instead of traditional TV ads, Elf dominates Gen Z and Alpha mindshare via TikTok, Roblox, and influencer partnerships. Their unaided brand awareness in the US jumped from 13% 5 years ago to now 45% last year. So next year, well, we already went through some of these numbers. I don't like adjusted EPS as much. I'd rather use GAAP. But they do have net sales going from 1.6 billion this year to 1.9 billion, and gross margin of 70% is good with me. So they recently acquired Hailey Bieber's brand Rhode, and the acquisition of Rhode has given them a major foothold in Sephora and in the UK market. This also pushes Elf into clean girl prestige skincare, a higher margin category. They are currently in 16 countries, but have stated a target to expand to 120 countries, which is huge, meaning they have years and years of expansion to go. And success in the UK and Canada provides a proven blueprint for Western Europe and India. Fantastic. While they dominate color makeup, they are aggressively moving into skincare, which currently grows at twice the category rate. Now, here's where the problems and the risks are for this company. Number one, tariffs, which, as I always say, I think tariffs are temporary, and at some point they're going to come off, whether that's the Supreme Court, making a new, law, taking them off sometime this year, or whether that means we have to wait till the next administration or something to take them off. At some point, things are going to change. As a company that sources from overseas, that means higher tariffs, and that means a slight margin dip. The stock also trades at a high PE, which now, if you look at it, it's really not that high compared to what you were paying. I mean, the stock was over $100 last year. So that's why I think this is a decent price. I mean, if they're doing close to $3 of EPS next year, that means you're paying what? You're paying 20 times earnings for next year. That's a good deal. So that's why I think I'm bullish on this company. Let me know your guys' thoughts down below, and I will see you in the next video.